Good afternoon, my people. What is going on? It is your main man, Charles Tank Harris, the founder and chief visionary officer of the financial literacy platform Wealth Our Way, where our motto is wealth is not only for the wealthy. I want to welcome you to episode 175, making the most out of loan forgiveness. But before we get started, I want to practice the attitude of gratitude and say thank you, thank you, thank you to each and every one of you who are streaming with me live across the Wealth Our Way Facebook page and the Wealth Our Way Network YouTube page. I also want to give a salute and shout out to all the members of Wild Nation who will watch this episode of 15 Minutes of Finance when they have 15 minutes to squeeze their financial literacy fix in, whether it's over the weekend, overnight, or on their lunch break. And then a heartfelt how are you to the good folks on the Life 101 platform who listen to the audio recording of this very here program. I hope you guys had an amazing weekend and that your week is off to a tremendous start as we look to wrap up the month of August. A big announcement was made last week when Joe Biden said that he will be forgiving $10,000 of student loan debt for one classification of people and $20,000 for anyone in the other classification of people. Here's the thing. So I want to do two things in today's episode. I'm going to make the unpopular statement, which is true though, that I am not on the side of loan forgiveness. That's me taking a stance, being the guy who I always am. I'm going to speak the truth no matter how many people are against it. I don't feel as though loan forgiveness is a helpful idea. I also feel as though it puts an undue burden on taxpayers. I also feel as though it's unfair for those of us who went to school, took out student loans, and actually paid them. There are a lot of reasons why I feel as though loan forgiveness is not a good idea. But that's not what this episode is about. But I did want to make my opinion known. Better than that, I want to talk about what you should do if you are in one of the two categories or groups that are going to benefit from this loan forgiveness. The way it looks like it will work is that if you have a balance on your student loans, they will wipe out $10,000 of the principal balance. I am believing that at that point in time, they will recalculate what your payment is. It doesn't make a lot of sense to wipe out a principal balance portion of your loan, but keep you paying the same amount if you were having trouble making those payments in the first place. So I believe they will restructure the loan. I could be not accurate about that. And that's once again why when I come online, I tell people, make sure you're Googling everything that you hear here or anywhere else. The actual time frame of this loan forgiveness is in the future, so the plan could change many times over. What I do not believe is going to happen, which people are running around saying, is that they're going to get a check in their hands for 10 or 20,000, because I think Biden and everybody else in the world knows that money would not go back to the student loan people. So the transaction is going to be between the federal government and the student loan. It is just a function of whether they restructure the loan payment or they keep the loan payment the same and allow people to pay their debt down faster because they'll be making the same payment on a lower balance. I believe it's going to be the first way. I believe that if you have $50,000 in outstanding student loans and you're making a $200 a month payment, that they are going to make your balance $10,000 less. So it'll go from $50,000 to $40,000. And instead of $200 a month, you'll start paying $160 a month. The purpose of this episode is to tell you what to do with the $40 savings that example I just gave you will create. I'm going to give you 3 ways that you should use loan forgiveness to start building generational wealth. Because my other argument against loan forgiveness is that I don't think it's going to change anything. You know, there is a lot of talk in the media about, especially for African Americans, how student loans unjustly affect African Americans versus non-African Americans, how it increases the racial wealth gap, and all of these types of things. I call conversations like that hijacking the narrative. We have seen conversations start around a particular issue that, yes, they do have some relation to the issue, but more over, we're seeing a certain group hijack the narrative. Hey, they're talking about this. Let's spin it and make it about this. I'm not really sure that I agree that student loan debt is a huge contributing factor to the racial wealth gap as it's being portrayed in the media. Do I think it contributes at all? Yes, I do. But the way it's being portrayed in the media, no. I think the housing redlining issues of the 40s, 50s, and 60s contributed way, way more than anything that can happen now. Normally, when you see something that widens over time, it's because time has played a factor on it. And if we go back to post-slavery and the wealth that was in white communities that was not in Black communities, now you have a huge head start. And then throughout that huge head start, you have assets that are being transferred from generation to generation where another one doesn't have them. And then you add to that, the number one way that this group is building wealth is through home ownership being shut out to this group. That's what creates a racial wealth gap. And then time expounds upon it. So it's hard to make up ground. And adding to that, student loan debt being disproportionately taken on by African Americans, yes, that's a contributing factor. But waiving $10,000 or $20,000 or even $50,000 as people wanted to have done isn't going to close the gap if we don't take the proper measures after these actions are taken. So the first measure is to redirect the money that you're saving. At Wealth Our Way, we talk about the 1-2 punch of carving out a savings amount and then redirecting those dollars using the best use of a dollar. So if you get a $40 savings on your current monthly budget, $40 extra a month has just been added into your life. What are 3 ways you can make sure that you apply this $40 to increase your net worth over time and to assure a growth to your family's generational wealth goals? Way number 1, use that $40 to reduce debt that you have. So we've talked in the past about paying off debt using either the snowball method or the zero reduction method, where you are paying down a bill until it gets to zero and then transferring money to another, whether you're attacking the card with the highest balance, the card with the smallest payment, the card with the highest APR, whatever your strategy is, you would now have $40 extra. And once again, before someone says, where is he coming up with this $40? I gave an example where a person had $50,000 in student loans, making a $200 payment. They got $10,000 in reduction, which is 20%. So I took their payment down 20% from $200 to $160. The difference is $40. So now we're talking about what to do with that $40. It's very hypothetical. Your situation will be different. In any situation, these same rules apply. Whether it's $1 of savings, $5,000 a month of savings, you can apply this same logic that I'm telling you. Use the money to pay down existing credit card debt, personal loan debt. Start with your highest interest rates and start saving yourself money in your household and keep accelerating the debt pay down. Net worth is increased by increasing your assets or reducing your debts. The second way that you can increase your net worth and grow your generational wealth over time is by investing this $40. I get so many calls, emails, text messages, reached out from people about not having enough money to start. How do I start when my budget's already tight? We did a program on 15 Minutes of Finance about fractional investing through either Fidelity or Charles Schwab. And the reality is it does not take much money at all to open an account and buy a fractional share of stock, fractional share of an exchange traded fund. Being able to say, hey, I can't afford the whole share, but I can buy 1/20th of the share. You can invest and grow a portfolio with as little as $10, $20 a month. By all means, if you're going to now have freed up capital in your budget because of debt forgiveness, redirect those dollars that were going that way and make them go this way. The third way that you can assure generational wealth is through the purchase of life insurance. Once again, if we're talking about a $40 amount or a $20 amount, you're not going to buy a whole lot of life insurance. I am not a life insurance salesman, so I do not spend every day on the internet trying to tell you why life insurance is the greatest thing since sliced bread and trying to convince you why you need to spend every dollar of your budget on life insurance. Next month, September, is Life Insurance Awareness Month. I am going to do a program on life insurance. However, my background as an investment professional and an insurance professional shows me that great wealth building starts with making sure that your risks are taken care of. And one of the biggest risks that we have is that our ability to earn an income will stop before we reach our goal. It can stop from unemployment. It can stop from disability. It could stop because of death. We can insure against two of those things. There is insurance for when you die and insurance for when you get disabled. So looking at a plan of action to insure yourself in case something happens before you are able to save and invest enough money to pass on to the next generation is a good idea. There are two different types in general of life insurance: permanent insurance and term insurance. Term insurance tends to be much more affordable. So you may want to put a plan of action together where you take this $40 and direct it toward insurance premiums that may leave your family $100,000, $250,000, $500,000, depending on your age, $1 million of term insurance, so that if something tragically happens before you get to the finish line of savings, your family is the recipient of a death benefit from an insurance company, and that lump sum of money will allow your mission of growing assets on their behalf to be fulfilled, and generational wealth will continue to grow in your family. So to recap, the three areas where you can redirect any savings that you find come your way from loan forgiveness when that magical day does happen is paying down debt. Want to start with the highest interest debt first, in my opinion. And then as that money from paying off that debt is no longer needed, let's say you had a $20 payment on a credit card, you pay it off. Now you have the $40 and the $20 to start attacking the next debt with. The next thing you can do is you can invest this savings, this $40 that you no longer have to send to the student loan people. You can invest it. I always encourage people to open up a Roth IRA if they have earned income and start putting that $40 away. The last thing that I would suggest of the three tips to best redirect the funds that you can use to make the most out of loan forgiveness would be to purchase a life insurance policy, preferably a term policy, to get the most death benefit for the amount of premium that you are putting in. Those are my three tips for how you can make the most out of loan forgiveness. We have an amazing guest tomorrow night on the Financial Power Hour. Miss Devin Caudle will be here to talk about the real estate markets. We've heard so much going on about real estate prices rising, about interest rates rising, about private equity companies buying up all of the empty housing, and the average American not being able to buy a house. We're going to talk to Ms. Caudle tomorrow night about all things real estate. Is this a good time to buy, and what steps you should take to start to consider whether you're going to buy a new home for living purposes or for an investment purpose. We'll be back on Thursday with 15 Minutes of Finance. And I just want you guys to have the most amazing week, and to remember that wealth is not only for the wealthy. You guys have a great